Oh, welcome back. And so in this section, we're going to go into the return that we just started to create, and we're going to show you how to enter various types of income into that return. So let me share my screen here. And this is where we left off just a few minutes ago after we've done this. So we're going to continue on to this to start the return. Now, I'm not going to recommend that you use quick file. That's a way that you could do this, but we're going to say, I don't know which forms that I need. We're going to click right down in here. And now here you have two choices. And this is, let me talk about this for a second. And what we're going to do is we're going to go to select my forms, but I want you to be very careful. There's a choice here that you want to be guided. I want to be guided by answering questions about my tax situation. I'm not going to go through that because it'll ask a lot of questions that probably won't apply to everybody. I'm going to go into specific forms and show you the most common ones to enter income. But let me give you an example. We run VITA sites, and just a couple nights ago, I had a gentleman come in who had done their 2020 tax return using this FSA do-it-yourself software. And he had started getting Social Security in 2020. But when he started the software, he pulls out his 2019 return, and he was going to model all of that, like, you know, the income that he'd gotten. So he goes in and he kind of models all of that. He uses the forms that he got. He thought he didn't have to pay tax on Social Security. He had a Social Security form, but he didn't think he needed it. He came in this year that we were preparing his return. I look at his last year's return and I see a major mistake. And in his case, a lot of that Social Security was taxable. We had to amend his return. So the point I'm making is, if you're not sure, if you know which forms you're going to need, you've got them sitting in front of you and you know, do it the way I'm showing you. If not, go through the questionnaire, and you can always go back and go through the questionnaire. So that's the questionnaire is right here where it says, I want to be guided. But for right now, we're going to click on this box, shows a check mark, select forms. And we're going to go right here to continue. And this is the general screen that you're going to see when you come up. And by the way, let me show you this little trick right here. If I move you see my mouse here? If I move it over here to the left, well, I'll show you that later. Here, yeah. There we go. It opens up this screen. Usually that'll close, but I guess in this case, I had to click on the little 4 lines up here. Okay, so this is your main menu, and we're right here under the federal section, and then here under income. So you can always navigate back and forth using this thing, and usually the shutters close. I don't know why it's not anymore, but that's okay. So we're in the income screen. And what we're going to do in this portion of the video, we're going to talk about the most common one, W-2s. I'll briefly describe unemployment because it was important last year. I'll briefly describe these, but then I'm going to show you how to enter a 1099 interest. I'm going to show you how to enter, excuse me, a 1099 miscellaneous, and that would, actually, I'm not going to show you this one. I'll describe it. I'm going to show you how to enter a 1099 NEC for non-employee compensation. This would be if you have a little business you've got to create a return for. And then I'm also going to show you how to enter a 1099-R or Social Security work. And then most of these others I'm going to describe. I will show you how to enter a capital gains and loss and expenses for a business. The rest of these I'll just basically describe, but we're not going to go in and enter those. But so this should get you through 90% of people, the most common things that they're going to do. And here's the most common one, is a W-2. So I'm going to click on here, begin. And it first asks me, is this mine or my wife's? And I'm going to say that this is mine. Here's another big thing. You'll have the W-2 sitting in front of you, and it's got a lot of boxes, and usually the boxes are numbered, and there's little check boxes. Be sure to look carefully at that, because maybe they sent you a corrected W-2. that's, they made a mistake and sent you another. If those boxes are checked, you want to check those. And then here again, you'll see where the asterisks are. Those are the ones you really have to fill out. So here's an employee identification number, and I'll just make one up here. Employer's name. I'm gonna call it, I used to work for Maricopa Community College District, so I'll just say MCCD. United States is already filled in here. You got to have an address. I forgot where they were, 2654 West 14th Street. And I think they're in Tempe, 85282. So that fills in Tempe, Arizona. See how putting that in. So make sure all of those are required fields you're going to put in. Okay, so it should populate the employee's name because it has me, and it should populate my address in there. Here is a key phrase that I say, and I tell all my trainees when we're training people to work in the VITA sites and prepare your returns. You're keying in these forms. You got the form in front of you, and I tell them, this is one of my volunteers gave me this phrase, and I love it. If you see it, key it. So if you're looking at that form and there's something in the box, and here's the numbered boxes. If there's something in box 1, key it in, even if you're not sure what it means. Okay, so we're going to make up this W-2. I'm going to say that I made $30,000 for there. And I'm going to say that they withheld $3,000 in tax. Box 2 should have Social Security wages. I'm going to just use the same amount. Okay. The tax on this, I'm just going to calculate it because I don't know if it would give me a mistake or not. So the Social Security tax, that can't be right. It should be 1860. And then Medicare wages. Oh, whoops, it says to be too large. Oh, I know it's wrong. See, careful, watch what you key in there, because see, I left off a 0 on there. And I got a little warning that said, hey, man, that looks like it was too large. And so that did it. So here we go, 30,000. And then Medicare tax should be $435. Okay. And then, so again, all of these other boxes, if you see them, do it. Very common boxes will be box 12. So those are like employer things, or if you participated in a 401k account, or you had, you pay child care tax, pay really close attention. There'll be codes, AAAD. And hey, if you're wondering, what do those codes mean? You can click on this little learn more right here, and it will tell you. Some of the common codes are D, elective deferrals to a 401k. DD is another very common code, and that would be cost of employer sponsored health coverage. That's a very common code. And sometimes I'll warn you, when your employer is making those kinds of contributions, usually your Social Security wages won't match your taxable wages. So as again, pay very careful in that. Pay attention to these. Were you part of a retirement plan or that? Usually this is the common one right here. Most of these are very uncommon, but then we get down to the state, and you'll have a state. We're going to pick Arizona for me here. The state's employee's state ID number is usually the same, but put in whatever it has. I'm going to just copy this right here so that I put down into the state. State wages and tips, same thing, $30,000. Usually I have about 3% of that withheld, so I'll put $900 into there. Okay, most of these, we don't have local income tax, but other states like New York and California, those will have local income taxes. So I'm all finished with this. I'll go just kind of double check it, scroll down here. By the way, I'm done looking at this, so I can close that little X out of there. That would close it. So I'm going to say continue. Okay, so now maybe your spouse has got a W-2, but my spouse is retired. So this is the only W-2 that I'm going to put in, but I could add one up here if I needed to. So I don't need to. I'll click on continue. Okay, so now here would be for unemployment compensation. Now, many of you, during the pandemic, a lot of people collected unemployment. And in general, unemployment compensation is taxable. You may have gotten unemployment in 2020 and 2021. And in 2020, there was part of that last tax act said we're going to exclude $10,300, but that was 2020. 2021, there's no such exclusion. If you got unemployment in 2021, you're going to have to enter it, and you would just click on this box and then follow the form. Just put in what you got. Here would be if you got state or local income tax refunds. I'm going to give you the quickie version of this. Okay. If you received, and most people do, they receive state income tax refunds. Here's the big thing to think. If you look at your 2020 tax return and you took the standard deduction, meaning you did not itemize deductions, ignore this. Your state income tax refund is not taxable. If you did itemize deductions, meaning you had mortgage interest and real estate taxes, charitable contributions, medical expenses, and you had a Schedule A, you're going to pull that out and you're going to go in here, you're going to click on begin. I'm not going to go through all of this because this will not apply to many people. And you're going to fill out these fields right here, and TaxSlayer will calculate whether you have to pay any tax on that. I'm going to cancel this because that's going to apply to less than 10% of you that are doing this. Okay, but now here's 1099 interest and dividends, and a lot of you will get those. So we're going to go ahead and go through one of those. So here we say interest and dividend income, and it asks you here, did you earn any interest or dividend income from a bank, brokerage firm, or some other financial institution? So I'm going to say yes, okay, that I did. Here, there's a couple of questions about foreign bank accounts and savings bonds. Hardly anybody has those. Here's the main thing. We're going to click on begin here. Then it asks you, you're looking at that form, and a 1099 INT usually comes from a bank or a savings, a bank or a credit union on your savings accounts. Often though, sometimes you'll have a brokerage account, say at Vanguard, and they send you this big old statement, multiple pages, and they're in sections. And there might be 1099 INT, and it'll tell you there's interest from there. Or then 1099-DIV, those are dividends. And then it'll say 1099-B, those are brokerage transactions. So if you got one of those statements, you've got to break it out into 3 different entries here in TaxSlayer. I'm going to pretend right now that I got a Vanguard statement and it's got all 3 of those sections. So I'm going to say here's a 1099 interest income. I'll hit continue. Who's the payor? I'm going to call it Vanguard. Usually I thought this was required, but it doesn't look like it this year, but I think it is on the dividends. That you've got the form in front of you and they'll have it in there. I'm just going to put it in here just to be sure. I made one up there. Country, this is country, we're going to click on United States. Look at down here. See, these are not required, address and zip code. If there's no asterisk there, I'm going to just ignore it. Interest income, box 1. Remember, if you key it, see it. So if you got one of those separate forms from a bank, it'll say box 1, interest. If you got it from, like, say, a Vanguard, like I'm pretending I did, it'll have a section and it'll say box 1, interest income. Whatever you see in box 1, put in here. I'm going to put in $50, interest income. If there's something in box 2, put it in there. If there's something here's something that gets missed a lot is withholding. Go through and look at these, box 4, box 5, box 6, and put in whatever you see in there. In this case, I just had interest income. So I'm done with this. I'm going to click on continue so that I could, whoops. Oh, hey, now I didn't see a little red asterisk, but now it's telling me that an address is required. So I'm going to put in a fake address here, Vanguard Street. I don't even know what zip code. We'll just pretend it's Phoenix. Okay, good. So now let's see if it lets me continue on with this. Okay, good, it did. Now, so now it says it takes you to Schedule B, and you're saying, well, what's that? Well, that's where they report interest and dividends. And we could say add a Schedule B. This doesn't seem to make sense really, but you could click on here. If you're not sure, if that doesn't make sense to you, here's where you can go out to this screen here and get back to the income screen and say, okay, I've got an 1099 DIV I need to do. So I'm going to click on edit here. And again, it takes me right back to where we were a minute. And I'm going to say, yeah, I want to add a dividend income. And so now it takes me back to the screen. And you're going to have to say, add a Schedule B here. And in this case, I'm going to add a 1099 DIV. So I'm going to click continue. Again, we're going to say Vanguard. Doesn't look like it requires this, but I'm going to put one in here because I really think it did. Okay. Country is United States. We found out earlier that I'm just faking this out here. Phoenix, good. So, and if you were going to assign these to either me or for either me or the spouse or joint, I could pick on all of this stuff and call it joint. In a community property state, it doesn't really matter. Okay, but now here's where it's going to say, and on my Vanguard form, it's going to be in the section 1099-DIV, or maybe you got a separate form, but they're all going to have these things that'll say box 1, ordinary dividends. So I'm going to say I got 500 of ordinary dividends. Then it's going to say box 1B, dividends that are considered qualified. These are going to get a preferential tax rate. So just whatever's in the box numbers, match them up here and put it in here. So I'm going to say 450 of those were qualified dividends. And then now I'm going to say that there was also capital gain distributions. That would be in box 2A. And so I'm going to say here that I got $150 of capital gain distributions. The rest of these things I can tell you are very, very rare. But if you happen to see it, hey, maybe you told them to withhold some income tax. Whoops, right here. I will tell you, there is one that's not so rare, is look at foreign tax withheld. So maybe you have an international tax fund, an international mutual fund, and they withheld foreign taxes. You can get a credit on this return. So again, and TaxSlayer will take care of this as long as if you see it, key it. So if there was something in box 7, put it in there. I'm not going to do that here. So you just scroll down there and look at these, and I think everything's going to be okay. And I'm going to say continue. Yeah, okay, good. So now I got interest income and dividend income. I'm pretty good with this. I'm going to click on continue. Oh, by the way, in TaxSlayer, TaxSlayer does not like the browser back arrow buttons. You know, these up here, don't ever use those. Either hit continue or hit back in TaxSlayer. You don't want to lose your work. There are some screens in here where you're going to put in a whole lot of information. And then if you say, oh, I forgot to do something, and you click on the arrow, the back arrow up in there, you're going to lose all that information. Okay. So usually you want to click on continue. I'm going to show you a shortcut. So this has brought me back to the income menu. And you can see down here, see now it's telling us we put in W-2 wage, interest and dividends here. But you could always skip around if you remember, you know, you've done this return and then all of a sudden you get another W-2 in the mail. You could always open this up and go back in here and navigate directly to the W-2 screen. But we're back on the income screen. I'm going to go down here. We just did this here. 1099Ks, you get those if you're like an Uber or a Lyft driver, or you sold a lot of stuff on eBay or Craigslist. I'm going to ignore that. That doesn't apply to many people. Many people have heard of, oh, hey, I got a 1099 for that work I did for somebody, or something like that. There used to be, it was always just a 1099 miscellaneous. And usually on those traditional 1099 miscellaneous, there was a box 7 that said non-employee compensation. Now, IRS last year, they split this into 2 forms. Okay. The 1099 miscellaneous now is not very common. It would be common in a few instances if you got royalties, or if you're a tribal member of one of the Indian communities and you got per capita payments from gaming revenues, you would get a 1099 miscellaneous. So there could be some of those you would get. The most common one you're going to get is this 1099 NEC for non-employee compensation. This is where you worked as an independent contractor, or an employer that you just worked a little bit for claimed you were an independent contractor and he sent you a 1099. So when that happens, when you get one of these 1099 NECs, you've got to file a Schedule C business return. This is, you are in business for yourself. So we're going to pretend, and actually in my returns, I'm a CPA, and so I do taxes apart from VITA. I have clients that I do that. I also do educational consulting. I've got like 3 Schedule Cs. We're going to just pretend I've got one for, say, we'll say it's for tax preparation that I do. So I'm going to say I got a 1099 NEC, and one of my clients who I do a monthly accounting for, we're going to say this is for me. Payer name, we'll say this is Dr. Watson, because I do his bookkeeping for him, right? And address is required. I'm going to say 4652 North 7th Street, 85015. I don't know if that's right. Okay, I'm just making this stuff up here, right? So, and then it's going to ask you, and again, it's got all this information right on that form that's sitting in front of you, right? And it'll ask for the payer's tax ID number, TIN, or sometimes it'll say EIN, employer identification number, but this is found in the payer's federal identification number. So I'm going to make one up for him. Then we'll say who's the recipient, and it's filled this in because up above I said it was for me. Then in box 1, it'll say what was your non-employee compensation. So we're going to say that he paid me $4,500. Okay, didn't withhold any federal income tax. There's no state. This is good. I'm going to click on continue here. Now when I do that, it's going to say, hey, wait a second, if you filed this, you've either got to file a Schedule C business income or a Schedule F farm income. I've been doing taxes over 25 years and I've never filed a Schedule F, probably because in Phoenix there's not that many farmers. Maybe if I lived in Kansas, and that might be, but we're going to say it Schedule C. Now, if you had already had a Schedule C and you added a 1099 NEC, it would recognize that and would ask you, do you want to add this to your existing Schedule C? In this case, I haven't started one yet, so we're going to say no. Here's a Schedule C, and we're going to click on continue, and it's going to take me right into this Schedule C screen. Okay, so who does this business belong to? It belongs to me. Okay, business name, leave blank. I mean, I could put in Jim Simpson CPA, but it's just going on my personal tax return. And if you leave this blank, it's going to use my social security number as this. Everything's fine there. But now look here. First thing, before it even lets you go farther, you've got to put in a business code. Okay, and who knows what these codes are? I'm going to say click here for a list of business codes, and you can scroll down here. Now here's a good key, or a good tip. I'm on a web page right here, and if you hold down the control key on your thing and while you're holding it down, hit F, you can't really see it. Actually, it didn't work for me here. I don't know why that didn't work. Okay, It's because I'm sharing the screen, it didn't work. But down in the bottom left, it should pop up a little pop-up box where you can search for things. Like I would put in tax, and you know what? You just couldn't see it on my screen because it was hidden because I'm sharing the screen. But when I typed that in, it took me down here, right here, to tax preparation services. Okay. And it's under this heading, professional scientific. So here's the number I want to use. Okay, whoops, I was going to try to copy that. Doesn't let me copy it. So I got to remember it, 54123. And actually, I could leave this, oh, yeah. 54213, okay? And then here's a little X where I can close out of that screen. And I'm going to put in here 54213. Uh-oh, I guess I got the wrong, I didn't memorize it right. So Control F, tax. Whoops. It's under professional. Hold on. I hit enter twice, so I got to go. Here we go. Professional services. There we go. It's right here. 541213. I missed a one. Whoops. So I got to close the screen here. 541213. Description of business, and see, it filled it in. Tax preparation. That would do. There is an other. It's called other. If you can't find it, doesn't find a description for your business, you can say other, and then you can type in a description. But that list is pretty comprehensive. You ought to be able to find a category, and I would suggest you try to find a category that matches. They use this information for selecting returns for audit. So now I'm going to say continue. And so that was under basic information about your business. Well, I'm not sure I put everything in. I just want to make sure. So I'm going to click on edit. And yeah, this is that screen we were just at that asked it. Okay, so I just want to be sure I'm covering everything. Good. Now it's going to ask about questions about the operation of your business. So I'm going to click on begin here. And it'll say, what's your accounting method? Most of you will be cash businesses. If you have inventory, you've got to use the accrual method. I'm not going to explain to you what that is. Cash just means you record your income when you deposit it in the bank, and you record your expenses when you write a check for it. When it, that's the basic thing. Inventory, if you've got inventory, it gets way more complicated, and I'm going to suggest you get a professional tax preparer to help you with it. So I'm going to assume that I leave those things alone. I'm not even going to mess with it here. Okay. This box here, check here if you made any payments in 2021 that would require you to file forms 1099. And what that means is if you made payments to somebody for doing services for you, more than 600, you should have been filing 1099s on them. Again, that's way beyond the scope of this. But again, this is used for audit because if you don't check this box and you get audited and they find that you showed payments to outside services and they go look at that, then you're going to get fined so much per form you didn't file. Okay. None of you would have this, would have these things here. So I'm pretty much done with this screen. I'm going to click on continue. Then it shows income. And notice how that says edit, it doesn't say begin, because remember when I filled out that 1099 NEC, this is what prompted me to start this Schedule C. But that wasn't my only income. Okay, and a lot of taxpayers get confused about this. They say, oh, I didn't get a 1099, so I don't have to claim it. Nope, that's not what the law says. If you made any amount of money, whether you got a 1099 or not, you're supposed to claim it. So in my case, I got a lot of other tax prep fees that I didn't get 1099s for. So I'm going to click on here, edit. And be careful with this. Read this carefully. So it says right up here, total income from 1099 NEC. This is that income that came over. So I'm not going to double count that. But I know that I got, say, it says total income from work or sales, not counting that 4,500. I got another, let's call it $6,000. Or let's make the math simple. I'll say I got $5,500. That'll give me a flat $10,000 of income. Okay. Most of these you won't have to worry about. You're just going to put in that other income that I got from cash or checks and nobody gave me a 1099 for. So now I'll say continue. Then down here, cost of goods sold would be only if you had inventory. Okay. But now we're going to put in general expenses. So I'm going to click on begin. Now, I should have a list of accounting of all my general expenses. I'm going to make a couple of up. I'm going to say I spent $500 on advertising. Let's see what else in here. Insurance, yeah, I had to buy some liability insurance. I'll put $250 in there. Mortgage interest, legal and professional services. I'm not going to put that in because I should have sent a 1099 if I paid more than that. But yeah, I have a lot of office expenses. I'm going to put $2,500 of office expenses. Rent or lease of equipment. Oh, supplies. Yeah, I had to buy a bunch of paper and stuff like that. I'll put $1,000 in there. Taxes and licenses. Yeah, I had to renew my CPA license in there. So I'll put $300 in that. Travel, I didn't do any travel. If you have meals, be careful of this. If meals, you can't deduct your lunches that you know while you're out working, right? None of us who work for people get to do that. But if you took a client out to try to sell them services, you could put it in here. If you have that, I would click these learn more things and read about these because there's a lot of rules about claiming meals. Okay. Utilities, wages, I just worked by myself. Now, I did have a couple of other expenses that aren't in these boxes here, but we're going to get to that in a minute, okay? Right now, I'm going to click on continue. The next one says car and truck expenses, and a lot of entrepreneurs have this, but you need to be very careful about using this because there's a lot of rules. So we're going to go in here and we're going to say, yeah, I had some car expenses in here. I'll click on B. It asks me, well, what kind of vehicle did I have here? And I'm going to put, I had a 2018 Prius. When did I place this in service? Well, I've been using this since December of 2018. So I'll put in the year that I placed it in service. When did I start using it for business? But of course, I don't use it all for business. That's my personal car too. And here's where it gets very tricky. And you're going to sign a return. You're going to attest to these boxes that you're about to check here, right? It asks me how many business miles. Now, what the law says is it says you can only deduct business miles if you have a record of it and if that record is written. And look at these boxes down here, right? It's going to say, here, was this vehicle available for personal use? Do you have evidence to support your deduction? And if yes, is the evidence written? And if you don't check those boxes, the deduction is disallowed. So you've got to have a written record. And my suggestion, we got apps now. You can get an app where you can record your things. But I'm gonna educate you on one more thing here. I'm going to say here, this was available for my personal use. And check if you have or your spouse has another vehicle. Yeah, my wife's got a truck. So I'm going to click that. But now I'm going to put in business miles and I kept a written record, right? And I didn't really drive that much last year. I just had 250 miles. What's this commuting stuff? Commuting is driving to work and driving home. And you may say, well, yeah, well, I work out of my house. So, you know, and here's where you got to be careful. Unless you have a legitimate home office, and that requires a whole nother set of rules, most people don't. Okay, even I'm a CPA and I'm sitting right here in this office. This is my home office. It's a separate bedroom, you know, but you know what? The rule says I've got to use it 100% for business, and I don't. I pay my bills on this computer. I work for my nonprofit, which actually I'm an employee of that. So employee use doesn't count. I also have a music studio in here where I play guitar and do recording in it. So I use it for personal use. I do not deduct home office expenses. Okay. If you do, if you qualify for that, then your mileage away from your work is at home, then it counts when you leave home. Otherwise, my first trip of the day is non-deductible. That's like driving to work. That doesn't count. That's commuting. Then when I leave that and I go to another place, like I go see another client, I could count that. Or then I go to the bank to make a business deposit, I could count that. But then now I come home, and that's commuting miles. And it wants you to list the commuting miles here. So I'm going to say here that I had 5,000 miles of commuting, and then I tracked all my other personal use was 3,000 miles. And then I check these boxes, and then I'll hit continue. So then that's going to calculate mileage expenses for my truck, for my car, right there. And so we'll say continue. Now, I told you earlier that I had some other expenses that weren't in those boxes that I put up here under general expenses. So I'm going to click on other expenses, and I'm going to say, like, I bought tax software. Whoops, I've used that before. And hey, that was pretty expensive, 1,200 bucks. Whoops, not 12,000, $1,200 I spent for that. Okay, so now I've recorded all my expenses on Schedule C. So I'm done. I can click here, continue. Okay. And it's more things about Schedule T. Here would be if you really did have expenses for business use of your home, but I would click on here and read this very carefully. Okay. The two places that get audited most on a Schedule C is business use of home and auto and truck expenses. So that's what gets audited most, right? Okay. So I'm all done with this. I can click on continue. It should take me back to the income screen. Now it took me back to the 1099 NEC. Right now, if you click hit and continue, it's going to walk you back. But I'm going to go up here, and I'm going to just to show you here how I could get to the main income screen again. So here's where we were. We had done the 1099 NEC. So we're going to do a couple more income screens in here, and then I'm going to stop this video, and then we'll come back with a separate video for that. So I'm going to say 1099R, RRB, SSA. What is this stuff? Distributions from a pension, annuity, retirement, IRAs, Social Security. Now, I retired a couple of years ago, so I'm getting a retirement, and my wife's getting Social Security. So I'm going to click on begin here, and we're going to show a couple of those. So here, right up here, it says add or edit. My retirement, I get Arizona State Retirement System, and they send me a 1099R. So I'm going to have that form sitting in front of me, and I'll click on begin. So whose 1099R is this? That's me, right? The payer's ID, I've got that in front of me, and this is saying the Arizona State Retirement System. And I'm going to say their ID, I'm just going to make it up. I don't know what it is 452122356. Okay. And their name is ASRS. Okay. I don't know what they're at. It's something like 1205 North Central, something like that. 85013. Okay. So I just made up that stuff, right? Phone numbers optional. Recipient, that was filled in me, that's me. Okay. If there were boxes checked on there, remember, just whatever it says in those boxes, fill it in. I'm going to go up here to the top, gross distribution. So I'm going to say that I got $20,000 from retirement. Now the taxable amount, usually this fills it in. Okay. There, you might have a 1099R that says, hey, this is blank, and it might have this box down here checked that says taxable amount not determined. In general, usually these 1099Rs, they come from IRAs and pensions and things to where 100% of it's taxable because it was tax deferred. You never paid tax on it. But there are instances to where you contributed after tax money to that plan. And then when you start taking it out, there's a portion on it you don't have to pay taxes on. This is beyond the scope of this here, but this would be one instance to where you could call us and we could help walk you through that if you have a 1099-R that's got some of that. We're going to assume that this is simple for us now, okay? So none of those boxes were checked, but hey, always watch out. If you see something in one of these boxes, put it in. I'm going to say, yeah, I had $2,000 withheld from this, 10% of it, okay? None of these other things would apply to me, okay? But so I'm going to say continue and finish this up here. Oh, what? I forgot the distribution code. So what are these codes? There would have been a code in that box. And if you had the form, if you turned it over and you put on a magnifying glass, you could read all the codes, right? Code 1 would be an early distribution, and you may have to pay a penalty on it. In my case, it was due to retirement. I'm over 59 and a half, and it's code 7. So I'm going to put that in here. You could click on here, learn more, and look over here on the left. There it goes. This would tell you what all those codes would mean if you were curious. So you could go there. Okay, I think we're done with that. But one more now here. Oh, now it asks me, did I make an early withdrawal from a retirement account due to a qualified disaster? I will tell you that coronavirus, as it says here, is a qualified disaster. And if you withdrew money because of COVID, you want to answer these questions. I won't give you all of the things, but in my case, this was no. That would usually be if you took an IRA distribution because you got laid off from work due to COVID, or you had to stay home and take care of somebody and you needed money, lots of things like that, okay? Now, right here, I've done this, but in this says add another 1099-R IRA. Actually, I want to add my wife's Social Security. So I'm not sure that this is what I got to click. So I'm just going to hit continue. And yeah, good. I'm glad I didn't say add another, because see, it's got a whole separate screen here for Social Security benefits. So I'm going to add this in. Now, a lot of you may be like that client I described earlier that said, I didn't think I had to pay tax on my Social Security. And if you don't have much other income at all, then you don't. None of it's taxable. But like in my case, you've seen here where I've got I worked, I got a retirement account, I've got Schedule C income, I got a lot of other income. They're going to tax up to 85% of my Social Security. The TaxSlayer will figure this out. If you just put in the stuff from the form, it'll put it in. So now I didn't select Social Security. Here it says Jim's. This is going to be Donna's Social Security. And we'll just say that she got $12,000 of Social Security. I'm going to say, yeah, I had them withhold $1,200. Usually you don't see that. That's where you got to tell Social Security. And in fact, I'm going to take that out, okay, just to make it simple. I've already put in a lot of withholding elsewhere. But then you'll see Donna's Medicare premiums. This probably won't affect you because unless you're itemizing deductions, it won't matter, but it doesn't hurt to just put it in to be safe. And on your form, you're going to see this, it'll say a 1099 SA, or I'm sorry, SSA-1099. It'll say, remember I told you, it tells you here generally box 5, and that'll be over in box 5. But then in the thing, it'll tell you how much Medicare premiums were paid out of your Social Security. And sometimes there'll be 2 amounts, add them together and put that in here. So I'm going to say here that we paid $2,125 out of this. And then I'll hit continue. So I've got those in. IRA pension, I'm done with IRA pension distributions, we'll say here. And now I'm back to my income screen. So let's see what else we've got here. Deferred, you know, what this one is, just so that you know, is last year, if you took a distribution out of an IRA that was due to COVID that you said, you could have split that up over 3 years and deferred some of it. You should know about that, and then you would use this screen to do that. If you received alimony, you're going to want to go through this screen and do it. We're going to pretend that I got a capital gain and loss statement. It was called a 1099-B. And remember I told you I got that big old Vanguard statement that had different sections? Well, one of the sections was 1099-B. And so we're going to go put an entry into that one so I can show you how that works. Okay. So I'll click on begin here, okay? And we're going to add in capital gains and loss items. I'll say begin here, and it asks me. Now I go look at that form, and I'll say, well, this is to both of us. It really doesn't matter in here. Description of property. So I'm looking at it, and actually these 1099-Bs, they're kind of separated into 4 sections, okay? One is short-term gains or losses, where the basis was reported. I'll explain that in a second. Short-term gains or losses where the basis was not reported. Long-term gains or losses where the basis was reported. And long-term gains or losses where the basis was not reported. So what does basis mean? Basis means, what did you pay for the investment when you bought it? Or let's call it a stock that you bought, or a mutual fund. If, in my case, Vanguard is my brokerage account. If I bought it within Vanguard, they know how much I paid for it, and they're going to report the basis, what I paid for it. But what if I bought it in a Charles Schwab account and then transferred it into Vanguard? Well, Vanguard doesn't know what I paid for it, so they're going to put it in that other section. So all you got to do is just read what's on the form properly. So we're going to say here that I sold 100 shares of Microsoft. Oh, okay, no, I see I've already put it. Well, I'm going to say that I sold a mutual fund, VSUX. That's the total stock market outside, I forget what it is, outside of the US or whatever. It's a mutual fund, we'll call it, okay? Date acquired, right? Well, hey, I was buying this all kinds of times. I mean, you know, this 100 shares, I bought it all kinds of different times. So it says alternate option. If date acquired is not known, leave the date blank and select an option here. So now I'm going to say select if out. But so now if it was put in under the short term section of that 1099-B, I would say various short term, but I'm going to say it was long term. Okay, I'm going to put it various long term. Now it says date sold, and this will be right on the statement, right? And I'm going to say it says I sold it all, the 100 shares, on 12/7 of 2021. Okay. Now it asks for the sales price, or sometimes on that form it's going to say proceeds. That's kind of usually what it says, is the proceeds. So let's say that, let's say the proceeds, I sold, what did I say, 100 shares of it, and let's say it was $100 a share. I got $10,000 in proceeds. Okay. Now here it's going to ask, what's the cost basis type? And this will be right on the 1099-B, box 12, and it will say whether or not the cost basis was reported to the IRS or not. In this case, since I bought these all through Vanguard, and it says it right there on the form, cost basis was reported, okay, to the IRS. That means Vanguard reported it to the IRS, and so they're going to look at my return and make sure I put the amount, because this is what's going to determine what's my capital gain or loss, right? So what was the cost? What did I pay for this? We're just going to say I paid $8,000. Okay, I sold it for $10,000. I bought it for $8,000. Now, there may be a column that has adjustments, and there's a ton of these things. The most common that you'll see is a W for a wash sale. But all you got to do is, if you see an adjustment in there, put it in and check the box for whatever this is here, right? You have to kind of look. Usually, the most common here would be, let me find what it here, it's a wash sale, non-deductible loss other than a wash sale, right? Actually, that should say due to a wash sale. I can't find it on here. It's on there. If we look hard enough, you'll see it. But in my case, none of this applies to me. Okay, there it is. Non-deductible loss from a wash sale. So that's the most common one that you will see. Okay. Again, if you see it, key it. So I've put in my capital gains. Now, you may have more. There may be multiple transactions. And by the way, I'm going to tell you a shortcut here. If you did a lot of transactions within my Vanguard account, it's going to show those 4 sections with multiple entries in it, and then it'll summarize it per section. And I can just put in the 4 entries of each section and put in the totals. So I would make 4 of these entries. Okay, and then I would just put the summary totals that are at the bottom of it. So it's just a shortcut. Or if you want, you can enter in every transaction that's on that statement. So I'm going to say I'm done. I don't need to enter another, and I'll click on continue here. So this, I could add another one right here, but I've added this in here. We're good. Now, one more thing about this screen I would tell you. You just saw me enter a transaction where I got 10,000 back from it, but I had paid 8,000, so I have a $2,000 gain. But you know, maybe you were back in 2008, and man, you sold off a lot of your holdings at a big loss, and we've seen this, right? You know, where I've seen them, they've got $50,000 of losses. When your losses exceed your gains in any one year, they allow you to write off 3,000 at a time. And if you can't use up all of it, then they carry forward to the next year. So if you have carry forward losses, you got to pull out your 2020 tax return, look on Schedule D, and down there at the bottom, it's going to tell you the loss carry forward to 2021. And if you have one of those, you're going to go into here under other capital gains data, including capital loss carryover. You click on there and just fill out the screen based on what's on your return. Not many people have that. Another thing is perhaps you sold your main home. Most people will not have a gain on that, because if you're single, you can exclude up to 250,000 of gain. If you're married, I think it's 500,000. You've got to meet some rules. Here you can click right on here, and this would tell you more about that. But not many of you sold your main home for here. So I'm going to click on continue. So I'm back to the income screen, and I think I've done all of the income I'm going to do. No, a couple more things I want to show you here. Okay. If you happen to rent out, you know, a condo or a past house you'd sold, you would go in here, but this gets a little complicated, and we're not going to go through this. And by the way, this would be one of those examples if you're doing it yourself, because maybe we turned you away from a VITA site because the IRS doesn't let us do rentals. Okay, but we said, hey, you could go do it yourself, and you call us up and ask for help. We can't help you on the rentals. So sometimes, unless you're pretty savvy and can read the IRS instructions real good, you might want to consider a professional tax preparer. Here's less common income. And here you might have some of these. K1 earnings. If you had you were a member of a partnership, or you had shares in an S corporation, they send you a K1 at the end of the year. And if you've got a simple K1, you could click on this, and again, just follow the boxes, put it in, and you could do it. Here's what's more common: gambling winnings. And by the way, I'm going to go back up a minute, okay? Back up here is, notice, okay, no, it's not in there. Scratch that. We're going to go to here to gambling winnings, right? And you go to the casino, you hit it big in the slots or something, and they make you fill out a W-9 so that they can send you a W-2G at the end of the year. So let's pretend I had some gambling winnings. Here's what I was looking for a minute ago up there. See where it says gambling winnings W-2G? You could say here, learn more. I'm going to pretend that, yeah, Donna's retired and she went out to the casino and played some slot machines, and boy, she hit one good. So I'm going to say, hey, this belongs to her. It's got all of our address stuff in here. Payer's information, I got to put in something here. Okay, payer's name, we'll call it VQuiva. I spelled it wrong last time, but that's close to our thing. I don't know where they are. It's 5,000 South 51st Avenue, something like that. Okay, so I got that in there. Then it's going to ask, well, what did we win? I'll say, well, she won $2,000. Now, you're going to all ask, hey, can I deduct my losses? And the answer is yes, you can deduct losses up to the amount of winnings, but only if you itemize deductions. We're going to talk about itemized deductions in the next segment of this. Most people these days are taking the standard deduction, but I'm going to say here, yeah, she's got receipts. She showed that she spent $1,500. In fact, the casino usually gives you a statement showing how much money you put in that stuff. Type of wagers, I'm going to say this was slots, slot machines. Date one, well, she was going there, all that. I'm going to say it was, she was going all through the year. So I'm going to just say she got it on the last day of the year. Okay. So I'm done with that one. Now, I'm not going to show you more screens, but again, under that, whoops, I'm back here into less common income. There are a few screens in here you should pay attention to. Okay. Sometimes other income not reported elsewhere. Sometimes if you've got, if you're going to school and you've got scholarships that exceeded your expenses, you've got to pay tax on that difference, and you put it in here. That's one thing. Sometimes here's cancellation of debt. Maybe, you know, you had a credit card canceled, and you know, this is they sent you a 1099-C that said, hey, we wrote off your debt. Well, when that happens, IRS is looking at that as if somebody gave you money to pay off your debt, and you've got to pay tax on that income. So if you've got a 1099-C, just follow the instructions and put that in. Most of these others, here's where you would put in the K1 stuff. Most of these others you would never come across. So I'm going to say continue here. And I think that's going to finish us up for income. Let me look at this. Yeah. So I've pretty much covered all of the common income that you would need to do that. So I'm going to end this recording. And when we come back in here, we're going to start talking about deductions. So we'll see you in a bit.